Is it possible to generate more than $200,000 with a system in spread between stocks and indexes? In this video, we will see how to create a spread between two pairs and make a big profit. Market Guide Beta returns the slope of the 60-month regression line of the percentage price change of the stock relative to the percentage change of the Nasdaq 100. A stock with a strong up beta, greater than 1, will tend to move upwards, accompanying and usually exceeding moves of the Nasdaq 100 index, so we can design a system around this concept in an effort to capture the reactions of the stock to the market. If the Nasdaq 100 index moves upward, we would expect the stock to rally with it. If the index makes the move and the stock hasn't reacted, we may want to establish a long position in an effort to capture the rally the stock likely will experience as it catches up to or even exceeds the Nasdaq's performance. First, we calculate the percent change for both data series. We divide the close of the current bar with the close of 10 bars ago for both data series. Since we will be dividing, we first make sure that our divisor, price 1 and price 2 of len bars ago, are not equal to 0. We store the resulting percent change values in the variables percent change 1 and percent change 2. If this system is not in a long position, and the percent change of the first data stream is less than the percent change of the second data stream, and the 8-bar exponential average of the closing prices is greater than the same 15-bar average, then we will look to establish a long position at the next bar's open. We specify the number of shares to buy using the num units function. We will use a version of the trailing stops. We will use the variable MP to store the value of the keyword market position. This with the intention of being able to reference the values of market position of previous bars. If we are in a long position, and 1 bar ago we were not in a long position, then we will assign the low of the current bar minus the 4-bar average of the range to the variable stop price. If we are in a long position, we will place a stop order to exit from the position at the stop price or anything lower. Then we will calculate a third of the distance between the low of the current bar and the stop price, and we will add that to the current stop price. The resulting value is our new stop price. We are going to test this code on 8 different companies: Adobe, NVIDIA, Amazon, Apple, Meta, Microsoft, Tesla, and Google. I launch an optimization of the len parameter for each individual company and choose the most promising results. Let's see the results obtained. Adobe, $5,000, NVIDIA, $41,000, Amazon, $31,000, Apple, $28,000, Meta, $28,000, Microsoft, $10,000, Tesla, $64,000, and finally, Google with $19,000. Okay, let's go to analyze the portfolio results first. I upload the reports of my strategies to my tool. We go to Strategy Pro Viewer and select the reports just loaded. From the result, we see a not bad equity with some interesting results, but flattening out in the last period due to inoperability of some systems. In detail, we see how Tesla, NVIDIA, Meta, Microsoft, and Adobe have stopped trading since late 2021. Going into the Metrics tab, we find a net profit of $230,000, a profitability percentage of 43%, a profit factor of 1.88, and a max drawdown of $9,400. In the Correlations tab, we set a weekly period. We see that there is a peak correlation between Google and Apple of a 0.23, nothing of concern, while we see how Meta is not correlated with any of the 8 proposed companies. Let us now look at the profit-loss distributions, noting how the Gaussian agrees at the highest point between 0 and 500, resulting in a performing portfolio. In the Allocation tab, we see the distribution of returns according to our companies. We see how Tesla brought in a total of 28% profits in our portfolio, followed by NVIDIA, Amazon, Meta, and Apple, with a similar percentage between them. In the last tab, we see the returns. We can see that in this portfolio, we have positive annual returns except for 2022, with a loss of $1,600, returns also distributed well monthly, and we see that the most profitable day in the week is Thursday. If you have any doubts or concerns, please feel free to write to me, link in description. Thank you for watching so far. Subscribe and like for more content like this.